Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. There's just an hour to go now until the closing bell, and stocks are higher here after President Trump extended the ceasefire with Iran. Plus, investors are anticipating Tesla earnings after the close. Our very own Jared Blickery is standing by with the latest moves. Jared.
Thank you, Josh. It is another mega cap driven day, and here we have the Dow up about 200 points or 0.4%. You can see we started the day a little bit higher and we've just been kind of drifting down there, but still holding on to some decent gains. NASDAQ is actually built on its gains from the morning. It's up 1.25%, and here's the S&P 500, kind of flat most of the day, but still holding on to gains of about 0.75%. Interestingly, the S&P 500 equal weighted, which is where every stock gets one vote, that is slightly underwater today. We saw that reach a record high earlier this week. And then here's the Russell 2000. Small caps, looks like, well, by that chart, they're drifting to the red, so a little cognitive dissonance there. Let's check out the S&P 600. That is just barely in the green. That is another small cap index that we're looking at. We're going to take a broader look at the Dow Transports here, but check that out. Down 7% today. Avis Budget Car, that's the ticker, that is down quite a bit. But here's the semiconductor index, that is up 2%. This is day number 16. It has been, I think, hitting record highs for 10 or 11 straight now. I'll clear that up by the close. And let's check out the Treasury market. 10-year T-note yield just about flat, 4.3%. 30-year also just about flat, 4.9%. US dollar index, meanwhile, just creeping a little bit higher. Well, let's take a look at the large cap sectors. Here we have XLK. By the way, that is 16 days in a row up for XLK as well. If that holds into the close, that's up 1.75%, followed by energy. Both of those, the only two outperformers. To the downside, we got real estate. That's down 85 basis points, and then industrials off about 0.5%. And let's check out the NASDAQ 100. A lot of green here. We've got Tesla earnings on deck after the bell. That stock is up about 0.33%. Check out Broadcom, up 4%. Check out Apple, up 2% after that big decline yesterday, which was the worst in a few months. Then we got Microsoft, Amazon, Alphabet, each of those up more than 1%. And we'll get a little bit of a dive into the semiconductors, seeing a lot of broad strength here. SanDisk up 7%, Micron up 8%. And I wanted to go to software. There we go. And we're also seeing a decent day in software, a little bit more red than the other board, but Oracle up 3%, Palantir up 4.25%. Now I want to show you the transports, because transports have been flying high, setting records over the last 2 weeks, but not today. One stock in particular that's got my eye is, well, let's see, there we go. Down 30%, that is Avis Budget Group. That's the worst day in almost forever, but that stock has been on a tear. Want to show you, it was up over the last month, something like 600+%. Well, it is off that mark today. That is a huge short squeeze, which I've been writing about on the Yahoo Finance site. You can check it out there. And I just want to show you a chart of the Dow Transportation Index with and without Avis. And this is year to date. So the Dow Transport's in white here with Avis, and this is after yesterday. This is before that big loss today, up over 600% over the trailing month. And then the Dow Transports without Avis up about 17%. So 38 versus 17%. We did have a record high in that fake index, the modified index, a couple days ago. So we did take out these earlier highs, but you can see how much of this ascent in the Dow Transports is just because of that short squeeze in car. Back to you, Josh.
All right, thank you, Jared. Let's look at what investors are watching out for now as markets juggle geopolitical headlines and wider sector rotation. Kevin Mahn, Chief Investment Officer at Hennion and Walsh, joining me now. Kevin, always great to see you. So you look at these markets today, Kevin, we're in the green. Of course, we have rallied hard off that March low, Kevin. Market seems to be looking through this war, Kevin, through this conflict. Do you look at that and say, yes, the stock market is right to look through this conflict, or no, it's underestimating risks? How do you think through it, Kevin?
It's a great question, Josh, and this is what I will say. We are within the midst of a historic rally in the stock market going all the way back to 1928, Josh. This is the first time that the S&P 500 has reached a new all-time high within 11 days of falling by 5 or 10%. We also saw just a few days ago that the NASDAQ Composite Index rallied for 13 consecutive days, the longest such winning streak going all the way back to 1992. So to me, as a portfolio manager who's done this now for well over 3 decades, it just reminds me of the dangers of trying to time the market. Because often what we see is that the best days in the stock market come shortly after the worst days. And I do believe that the worst days are behind us, as does the market, and that's why we continue to grind higher.
That stat you mentioned there, Kevin, which really jumps out, that this has actually been one of the fastest rebounds back to all-time highs in nearly 100 years.
That's right.
What does that, suggest to you, Kevin, about sentiment and positioning and FOMO?
Yeah, the way I look at this is that the stock market was a coiled spring that continued to be compressed each time we heard more negative news with respect to the conflict in Iran as it relates to the Strait of Hormuz, tankers passing through successfully, higher oil prices, which led to higher gasoline prices and more inflationary pressures. But once those types of factors alleviate, as we saw with the ceasefire extension, then investors move back to focusing on those areas of the markets that were doing so well prior to the conflict, focusing on Q1 earnings, which have been outstanding thus far, and focusing on likely where the economy is heading. So I do believe that investors are now starting to look past the Iran conflict. Perhaps they shouldn't be, as there could be more short-term bouts of volatility ahead. But over the longer term, I think you revisit those investment themes that were resonating so well, and you can do that, Josh, just by following the money and where all the money continues to be spent.
Kevin, it does seem like, listen, investors have concluded this war is not going to impact corporate profits. I'm curious, listen, we got some big names after the bell today. You got Tesla, Big Blue, IBM. Broadly, what are you expecting this earnings season, Kevin? How strong is it going to be?
It's going to be strong enough that we will have the 6th consecutive quarter of double-digit year-over-year earnings growth, likely in the high teens this quarter, which is outstanding if you think about how consumer sentiment really fell during the first quarter because of those rising oil prices. Yet consumers continue to spend, as we learned from the banks earlier this earnings season. And we also know that the AI revolution and all of the spending associated with the AI revolution, particularly as it relates to infrastructure, continues. So if the consumer is still spending, if large cap technology companies are still spending on AI infrastructure, that alone should move the economy forward.
What about the Mag 7, Kevin? Big tech is on deck. Do those big names have to beat and raise in order for this market to keep moving higher?
Certain of those names do need to beat, but if you consider this, Josh, going back to 2023, the Mag 7 accounted for 62% of the total return of the S&P 500. 2024, 54%. Last year, 43%. Guess what it accounts for thus far this year? Less than 1%. So even though a large majority of retail investors hold those Mag 7 names, most investors are going to focus keenly in on NVIDIA, the hub of the AI ecosystem. And I think once again, NVIDIA is going to knock the cover off the ball, and it's going to tell everyone that the AI revolution is still alive and well.
Let's end on some names you like, Kevin. One is Sterling Infrastructure, which has been a rocket ship. You say it keeps moving higher.
I do. So following my theme of follow the money, where's all the money being spent? AI infrastructure. Think about a construction company such as Sterling Infrastructure. They used to build out e-commerce infrastructure, warehouses, distribution centers. Now they're building out data centers, and the money has flowed to them, and their stock has appreciated considerably.
What about NextEra Energy? Now, Wall Street likes this name. I'm just looking. Analysts who cover it, 70% are telling their clients it's a buy. You do too.
I believe it's a buy, certainly. Utilities are one of my favorite sectors. We always talk about that when I'm your show, Josh. Not your father's utility. Yes, they hold up well in the face of volatility. Yes, they pay good dividends generally. But now they become a backdoor play into the AI revolution as well, because these data centers consume massive amounts of power, and they have to turn to the utilities of the states that they operate within, at least as of now. NextEra Energy supplies not only natural gas, electricity, but also nuclear power, because NextEra Energy owns Florida Power and Light, which owns and operates 2 different nuclear states in the state of Florida.
What about Kratos, which is a defense contractor? You know, some viewers may not be as familiar with that one. Kevin, why do you like that one?
Small cap name, but they focus in on autonomous warfare. Think of drones, drone technologies, which were very vital in Operation Epic Fury to actually identify where our missiles should strike to hit the different targets that our U.S. military identified in Iran. Kratos is benefiting from their drone technologies, and I think there's more upside there, although there'll certainly be volatility because they're such a younger, smaller company.
And I'll end here, Kevin, one name I'm not familiar with, Apellis Pharmaceuticals. Why are you a fan?
Yes, small cap biotech company that was recently acquired by Biogen, the same Biogen that acquired Reata Pharmaceutical back in 2023. I think the pace of M&A activity is going to pick up with small cap biotech companies, Josh, mostly because large cap pharma right now is being pressured by Congress to lower their drug prices, and they have many of their larger revenue producing drugs coming off a patent and now being subject to generic pricing. So where are they going to turn to replace all that lost revenue potential? They're going to have to be acquisitive, in my opinion, and those smaller cap biotech companies that have drugs that are near the FDA approval finish line, whether it's CAR-T, CRISPR technology, gene editing, gene splicing, GLP-1s, those are the types of drugs that are in favor to the large cap pharmaceutical companies. And Apellis actually focuses on immunology, which is really attractive across the universe of healthcare right now.
Kevin, as always, great to see you. Thank you.
You as well, Josh. Take care.
Coming up, SpaceX makes a big acquisition ahead of its IPO. We get the details on that next on Market Domination. Elon Musk company is tracking a deal to potentially acquire the AI startup Cursor for $60 billion. More, we'll bring in Yahoo Finance's Praz Subramanian. All right, so Praz, so SpaceX, a rocket company, explain to me why they may potentially want to drop $60 billion on an AI startup.
I mean, so first of all, right? Yeah. How many times have you seen a company almost before an IPO make a $60 billion purchase, right? That's what someone said online. I'm like, yeah, that's insane. But basically, SpaceX, a rocket and satellite company, remember they bought xAI, which is Musk's AI company, if you will, right? And that they created Grok, the chatbot, and other things. And what happened is they need a vibe coding like software that, like, what ChatGPT has with Codex and what Anthropic has with Claude. This is their way of getting. Cursor AI is that product. I believe it's one of the best in breed in that space. And I mean, $60 billion option to buy, or $10 billion in the future. Or to work collaboratively, that's sort of what they said on the.
Yeah, can you walk through the mechanics of this deal, because it was sort of interesting.
I think what I read that I think what it means is that they have the option to buy for $60 billion, but if they don't, it's a $10 billion breakup fee. I think that's what that is. But we're not going to. We'll allow you to work with us, right? So, which is a huge breakup fee, right? But I think that's the going rate these days in this world.
But you think, Bob, you think this is xAI? Are you saying you think it's xAI kind of falling behind rivals, and this is Musk looking to play catch up?
Yeah. Clearly, they're the fourth or third best AI company in terms of what they're doing from like a consumer point of view, and also this is their B2B play right there to get the software engineers on board. You get Cursor AI on there, and you have they can onboard a lot of clients. But just looking like at the post that SpaceX said, like they said we have a million of H100 equivalent Colossus training supercomputer. What that is, that's tens of billions of dollars worth of supercomputer compute that they have at this Colossus facility, I think in Tennessee, right? You have this build out. You add Cursor AI, you add more software to it. It might make sense there from a massive sort of enterprise play. I mean, that's a pretty big deal to have that.
How much do you think, too, is it just Musk with this sort of grand vision he has, and it's kind of like in that vision, space and AI are just very connected?
Yeah, I mean, he's talked about how we can use AI to determine where do you put the orbital data centers, how do you launch them, how do you, you're going to need a lot of compute power to determine all these things. We're talking about math that I can't even comprehend here right now, right? So I think you're absolutely right. I think you need the AI component if you're going to have a rocket company, if you're going to have a satellite company, you're going to have a data company, and that's all part of it, right? Because we're talking about data centers in space, right? Maybe you have it's the Cursor AI, xAI technology up there too.
So we were talking about how SpaceX, we're waiting for the big public debut, right? And then this headline drops. Do you think it changes at all, impacts how investors think about that? If an investor was sort of, excited about committing capital, does it change the story at all, the narrative?
I don't think it changes it that much. I think there's probably still going to be enthusiasm that was before. Anti this move, but you have to ask yourself, what am I buying here with SpaceX, right? I mean, initially, they had the big merger with xAI. People thought to themselves, why is this a way to just port all those losses from xAI, get those off the books, push that onto SpaceX, which is presumably still making money through Starlink and things like that. Is that why this is happening? And then am I going to be happy spending a lot of money, a big premium on the IPO? And I'm going to have this xAI company that's blowing through a lot of cash. Someone called it a money furnace, right? Like every month's a money furnace. But on the flip side, maybe this Cursor acquisition helps that business, makes it all better, and you have a really integrated play into the future of everything, right? Space, orbital data centers, Starlink, and now you have your suite of AI applications.
All right, thank you, Praz. Appreciate it. We'll be chatting with you later, of course, in the show for those Tesla earnings. By poly market odds, have Tesla at around a 24% chance to beat when the company reports after the bell. For more poly market odds, scan the QR code on your screen to go to Yahoo Finance's Prediction Markets Hub, powered by Polymarket. Well, United Airlines slashing its forecast this morning amid soaring fuel costs. Yahoo Finance's Julie Hyman and Praz Subramanian sat down with SDT Capital Advisors President Steve Trent to talk about how raising prices could impact demand through year end.
Steve, it seems like the premium tickets are still selling pretty well, but they can't escape these higher fuel prices. I mean, how How long do you think this is going to last, and how sustained an effect could this have?
Yeah, absolutely. This could last quite a while. I don't think we're going to have the Iran conflict end and the market's suddenly going to hit the undo button. I think there's a lot of churn that has to go through. You know, it's great that premium travel is doing well. And I would say in terms of that segment, you have the big three really targeting that space. And from what we can see, targeting that space effectively. If you look at what's come through from a revenue perspective, and as long as, let's say, the top 10% of US consumers continue to demonstrate that demand, that segment should be okay. But no airline can respond to this massive increase in jet fuel kerosene over a very short period. So everybody's feeling that effect.
Yeah, definitely. Pras, what stands out to you from United, and not just United, but some of the other airlines that we've gotten thus far with this conundrum on fuel prices?
Yeah, it's how operationally they're trying to deal with it, right? So United talked about cutting capacity, a decent amount of their capacity for the year, and then also having no real growth in Q3 and Q4. So that sort of speaks to the fact that we're not going to see that growth in both the top and bottom line that you might want to see. Although they had a great quarter in terms of revenue growth this past quarter in Q1, which sort of speaks to, like you mentioned, the premium sort of build out and what they're doing, keep pushing forward. But then, like you mentioned, how far does it happen when you have demand destruction because the prices are just getting so high? I mean, if you look at airline price right now for the summer, it's quite stratospheric. So the question is, let's say we have a resolution tomorrow, when does jet fuel prices come down? It's going to take at least a few months, and I think that's sort of the issue we're seeing. I think if you're United, you're hoping for the resolution as soon as possible, and you see the stock down today, but broader markets are sort of hoping for something coming up down the line. But yeah, I think it's an operational issue. It's how the Deltas, the Uniteds, and the Americans are trying to deal with that. And then you have the lower budget airlines that can't manage high fuel prices.
So how long do airfares keep going up at this rate? How far can they go? Because of this concern about demand destruction.
Yeah, look, I think actually the airfare side, there's still room to run. For example.
Well, this is bad news for all of us, Steve. You just said you booked your summer travel already. Well, not everybody's done that, so we're all in trouble.
Guilty as charged.
Yeah.
But I do think that, that is good for the shareholder eventually once we get past this extremely volatile period where there's just so much news flow in the market. It creates a great deal of difficulty in terms of trying to figure out how this stuff's going to trade. I do think, exactly to your point, when you look at the overseas stuff, the Americas is in a relatively good spot in terms of its crude supply. US, Canada, Mexico, Brazil, Colombia. Doesn't mean we have no issues with refined products, but the supply's there. I'm kind of curious what happens with some of these overseas markets where, United goes overseas, they have to refuel. And of the big three, they are the most international exposed. So, that's going to be interesting to see how that plays out.
Yeah, anecdotally, looking at prices in the U.S., they're up, but not so much. If you look at transatlantic, trans-Pacific travel, the prices are skyrocketing for all, not just the Americans and Uniteds, but also all the foreign airlines. It's insane in terms of how much the cost to go across transcontinental, or to another continent.
Transatlantic.
Transatlantic and trans-Pacific, yes.
Yeah. I mean, are we also, we've already seen some capacity cutbacks, to your point. Is it going to get harder to go to more places for a longer period of time as a result of all this? Are there just some cities that are not going to be as accessible?
I think it absolutely will. And if you look at the low-cost model, maybe a little dated, going back to the pre-pandemic days, if you're a network airline, you win the battle by having a strong demand curve and having strong unit revenue. If you're a discount airline, you're never going to win the unit revenue battle. You win that battle on having the best seat mile cost profile. And with jet fuel kerosene's move, it's impossible to have the seat mile cost profile. And you don't have the equipment and the capacity deployment today because there's not enough planes, there's not enough air traffic control capability. So a discount airline, under this scenario, either has to try and start luring more premium, like you've seen them doing, and maybe the weakest links are going to shrink more significantly than everybody else.
Okay, so I'm hearing from you, discount airlines are disadvantaged right now. Southwest is reporting tomorrow. I'm curious what you think we'll hear from them on all of this.
It's going to be interesting because if you look at Southwest today, latest 12 months versus 2021, Southwest Airlines is actually generating 21 some odd percent less cash flow from operations than it did in 2021. And if you go back to the last time we had a fuel spike like this, 2022 with the war in Eastern Europe, Southwest was in a different position. It was still hedging fuel back then. It's no longer hedging fuel. The carrier is making this push, and I have to give them credit for that. They are making a push to do more premium. But in terms of their international exposure, these long-haul routes, these overseas routes where you're getting really high fares right now, Southwest is 97 some odd percent domestic.
Yeah.
So it's hard. They're not in the right markets versus the big three.
Guys, I want to turn to Boeing before we let you go, Steve. So the company is not burning as much cash. That seems to be good news. How long does this fuel crunch have to last to start to affect plane orders?
Yeah, great question. So I think when you look at fuel staying this high, definitely a couple of things come into play. One, how old is your equipment? Two, what kind of flying are you doing? So you tend to see, let's say, modestly better fuel efficiency with longer stage length flying. So under extreme fuel spikes, for example, maybe you'll see a bigger pullback in regional than you would carriers using a 7.3. And then, of course, aircraft age, the newer stuff. You can argue that the newer stuff is not as durable as previous generation aircraft with all of the issues we've had with gear turbofan, this and that. But at the same time, the fuel efficiency is important. So I think with fuel staying high, I'm not saying that there's not going to be an impact on deliveries. I do think relative to other aircraft types, there should be at least some demand from the airlines for the newer equipment, even with fuel at these levels.
With regards to Boeing, what do you think about the fact that we're still waiting for this 787, I'm sorry, the 73 MAX 9 and 7, I believe, jets still sort of not certified yet? What do you think about that? You think that's going to happen? Because this is a massive mover for the airline.
Yeah, you've got that. You've got the MAX 10 hanging out there, and I think in Boeing's case, certainly the company has gone through a great deal the last couple of years. It wouldn't surprise me from a regulatory perspective if Washington just wants to make sure we get everything right on any of the new equipment coming out. Nobody wants a repeat of the Alaska Air door plug thing, that you saw a couple of years back. I think they have great product. I mean, 7.3 is the best-selling commercial aircraft in history. It's not like we have a company that doesn't know what it's doing. But I would imagine that, from a regulatory perspective, there's going to be a careful move this time. Nobody wants a repeat of the stuff that happens.
I will quickly add that Ortberg really has the turnaround going right now. He really has turned around the company from what it was before, when we had so many issues with quality and production, and it's like a night and day company.
Yeah, well, and the stock has largely reflected that. It's had some ups and downs, but and it's up today, of course, on these headlines also. Thanks, guys. Really appreciate it.
Thank you for having me.
Coming up, a look into what it takes to build your wealth. That's next on Market Domination. With caution on interest rates, regional price swings, and economic uncertainty, it can prove to be a difficult time for wealth building. Here to map it out for us, let's welcome in Oakland Consulting Group CEO Cedric Nash. Cedric, it is great to see you, especially on set. Maybe start here. You know, you're an entrepreneur, you're an investor. You've managed to build wealth through a lot of different ways: stocks, entrepreneurship, and real estate. And I wanted to get your take on that to start. Real estate. You look at the real estate market right now. Do you see it as strong, as resilient, as a good time for investors to get in?
Right. It's a really good question because it could be very tricky, especially given the fact that interest rates are kind of settling down a little bit. But you have to really pay attention, in particular, when you look at residential properties, you got to look at inventories. You know, the national inventories of residential real estate is about 4.1 months of supply, meaning that it's going to take 4 months to exhaust the existing supply of real estate. Well, there's a rule of thumb that if the supply is less than 6 months, it's kind of a seller's market. When you're between 6 and 7 months, it's kind of a balanced market. When it's over 7 months of supply, it's a buyer's market. So we're really in a seller's market at 4 months of supply. I think that on the residential side, there's reason for pause, even though interest rates are really, really low. You know the old saying that you make money when you buy, you realize it when you sell. So it's important to buy real estate right. On the commercial side, when you're talking about multifamilies and office buildings and retail properties, it's always about the cap rate. It's all about what we call the net operating income over sales price, the annual net operating income over sales price. When you have a cap rate of commercial properties are selling about 8% cap rate, which is not a great cap rate, and that's why commercial office space kind of lags. So it's really about, can you get a property at a really good cap rate? Can you get a decent return on your investment for your properties? I like that 7 or 8% return on my investment, or else I'd rather go buy a dividend stock.
If I was a viewer and I was watching this right now, Cedric, maybe I'm just starting to get curious about real estate investing, just starting to get curious. Any kind of just basic tips and tricks, advice you'd offer?
Well, I think first of all, you want to buy right. That's the first thing I would say. You want to buy a property and you know that you're getting a really, really fair price. And so you have to look at comparables, and you have to constantly be doing your research to understand what houses in this particular region sold for historically, to know whether or not you're getting a good price or not. Because like I said before, you make money in real estate when you buy right. Too often people are buying when they can, and they end up buying wrong, and then they hit the wrong side of the market and they have to unload it and potentially lose money. So, you know, according to our good friend Warren Buffett, you never want to lose money. That's rule number one.
More broadly, Cedric, you know, you give people a lot of advice about how to think about building wealth. And let's say, you know, I'm a viewer, I'm listening to this right now. Maybe, you know, let's take a real world example. Let's put a number. Maybe I make $60,000 a year, and I'm just thinking about how to build wealth. What are simple, practical, smart steps people can take?
I think the simple, practical thing is to start in the stock market. I have this thing on my website that I call it an investment ladder. It starts with investing in the market to build up your capital until you get to a range where you can buy real estate comfortably, the kind of real estate that you really, really want to be in. And I also recommend, especially college students coming out, I bought a condo out of college, to look at multifamilies, look at 2 units, 4 units, because those properties you can buy with at the same level or same requirements of a single family home. However, it increases your net worth significantly because you've got other people paying the rent. And as you continue to build your wealth and add more to your stock market portfolio, move on to entrepreneurship, because we know that entrepreneurship and owning a business tends to increase your probability of getting to what I call destination millionaire. So there's really a step that you can take as you build wealth, because that's exactly what my journey was. I came out of college buying my first condo, continued to invest in the stock market, and kind of grew to where I can invest in my own business.
You created the Black Wealth Summit, Cedric. Explain to the audience what that is, and then also what is the sort of the mindset you're training and educating people on who attend that summit?
I love that. I created the Black Wealth Summit because there's a statistic that 84% of the wealth in America is in white households, and only 4% is in black households. And I wanted to teach my community how to invest, how to leverage the tools and techniques that I learned from my millionaire mentors, 3 which were black and 1 which were white, so that they can put these practices to play. Often because of the way the world is dispositioned, a lot of people of color don't get access to information because their parents either didn't have it or because they don't have it in their community. So I wanted to create a community that allowed my community to learn from like-minded people. I bring in experts from places like Charles Schwab, Morgan Stanley, Truist Bank, and they come and teach classes around investing in stocks, real estate, private equity, as well as entrepreneurship. And so that's really what it is. It's about teaching our community how to build their confidence so that we lean in and continue to invest.
Cedric, great to see you. Great to have you on the show. Thank you, sir.
Thank you for having me.
Was a potential lifeline for a struggling airline, a new weight loss push, and an oddly revealing kitchen table device. We're digging into all these stories with Yahoo Finance's very own Brooke DePalma. Brooke, let's start with Spirit Airlines, the company potentially getting a rescue package from the government. Walk us through this story.
Josh, so $500 million potentially on the table right now for Spirit Airlines from the U.S. government. This would ultimately mean that the U.S. government would take about a 90% stake, according to some outlets, in Spirit Airlines. So a pretty sizable part
the U.S.
of the
government
business
takes a stake.
here.
So Brooke DePalma, congrats, you own Spirit.
Yep, all the taxpayers do now. I mean, this is a pretty unprecedented sort of take by the U.S. government if this does happen. But this comes at a time where Spirit has certainly fallen behind. We know that JetBlue was supposed to potentially merge them just a few years ago.
That was 2022, and then the DOJ says not so fast, and the federal judge says agrees and blocks it.
Yeah, and they said that it would ultimately impact competition, that it would lead to less seats on the aircraft, and so that ended up not happening. But the problem here is that it sounds like, based upon sources that I've been talking to, is that this would ultimately mean that the government would then take a stake, and then what would happen from there is that the government would then look for other airlines to buy out. The problem is that the airlines that would potentially buy this company out, like a Frontier, like a JetBlue, they're all struggling themselves. They've been impacted as well. And so when you have low cash flow, you have these companies already losing money, you don't really have a buyer here. And I think that that's the problem that could happen should the government take a stake here.
All right, turning to another big story, Amazon, the company's pushing further into the health space with a new GLP-1 management program. So this one, they launched a new program book. It basically sounds like what they're trying to do is sort of simplify access to those very popular GLP-1 treatments, just jumping into a very hot area of healthcare.
Extremely hot.
Yeah.
I feel like if we had the amount of money to save for every time we've said GLP-1 on this show, we'd have a lot of money, Josh. I mean, seriously, this is just Amazon sort of getting in on what is so buzzy right now. Everybody wants to be in on this GLP-1 market, and this is their way of doing that. So Amazon One Medical, the pharmacy business, launched their GLP-1 program. Prices pretty good here. I mean, $25 with insurance, then with cash paying patients, it'd be about $149. That's pretty much in line with competition there. But essentially, this is them trying to get ahead of others who are also looking to
What do you
this
think?
space.
What do you think Amazon's edge here is? Because some names did fall on this headline, by the way.
Right, you had him and hers falling. You had companies who have sort of built their momentum year to date with GLP-1s in mind. And now all of a sudden you have Amazon, whose edge is that one-day delivery, who is going to maybe do it a little better. We've seen Amazon do this before. It's like anything that they take on, they do it a little bit better, and they're able to just get the customer.
You simplify it, you make it fast and easy, and then you dominate.
Convenience, right price point, that's what consumers want right now.
All right, finally, speaking of food, pasta and pizza sauce company Prego has launched a recording device to capture mealtime chats. Now, PC Mag has this story. I wasn't sure this was actually real. When I saw it, I actually checked the date because I thought for a second, that's got to be an April Fool's joke. But it's not. It's real. They say Prego, so obviously the pizza and pasta sauce company we all know and love, launching a recording device, the Connection Keeper. So it will record conversations at the dinner table. I guess this is like you want to capture mealtime chats with your family. Is that what this is?
Or it prompts mealtime chats as well. So maybe makes a few suggestions on what exactly you could be talking about.
You need a prompt to talk to your wife.
I mean, in this world
kids?
where phones and all the kids are bringing their phones to the dinner room table, maybe you do. I'm not really sure. It's just me and my fiance at the dinner room table right now. We got nobody else. But what I will say is I actually feel like when I read this, it warmed my heart a little bit.
It did.
It
didn't creep you out. No, you thought it was,
There's less than 100 that are being distributed. So the actuality of somebody actually getting one of these seems pretty limited. But two is I just wish I had some of the conversations that happened around my dinner table growing up. Like how nice is that part of it?
Well, then I thought about how maybe also Prego is just like, maybe the point is you just get people talking about Prego for a second.
We were talking about their sauce.
Brilliant marketing coup for that team, that company. I'm impressed.
I mean, but then I'm wondering, okay, they say that it's all private. They say that it's not actually going anywhere. I mean, like, how do you access these conversations? Is this device actually, I think it's actually made by a different company that they're partnering with for this. So will this and then boost sales for them? I think it's a pretty good marketing campaign. Bring back dinner conversations.
We should try it out.
Phones.
Like a little
experiment.
Time in Jersey. You, the fiance, the Liptons.
Okay, I'm down. Sign me up.
Tell you, I have a 6-year-old who needs no prompting.
Oh, I'm sure. I'm sure she's very chatty at the dinner table, talking about, what did you do at school? What did you eat for lunch?
Oh yeah, a lot of YouTube conversations.
Yeah.
I don't know if you want to really record or remember any of them, but it's cute.
But how nice would that be if you could listen to them back one day?
I think you're kind of sold on the Prego recording device.
I think I'm sold too.
It sounds like a hit.
And I just have to set a precedent. Growing up in an Italian household, Prego sauce. This is a good push.
In your Italian household, growing up,
we didn't really have Prego sauce.
Did you need the device to prompt?
There was lots of chatter at the dinner table. But what I would do to have those conversations once again.
Yeah.
So I like it.
All right, I like it. There you see a Prego, you got a winner. You got one sold. Thank you, Brooke. Appreciate it. Coming up, Gecko Robotics founders are launching a new venture capital fund. We learn all about that next. Stay tuned. There's a new bet in the AI space. Our next guest is launching a venture fund aimed at backing what he sees as the next big edge in artificial intelligence. For more, we're bringing in Troy Demmer, Gecko Robotics co-founder. Troy, it is great to see you. So you're launching this new fund. Troy, tell us about it. What's the problem you're solving for here?
Yeah, absolutely. So having built Gecko Robotics over the last 10 years, what we've really started to learn is that the physical world, the industries that undergird society, they have not gotten the attention necessary to, get the most out of them and serve humanity. And has having a ton of conversations with early stage founders, focusing on some of these industries that, look to Gecko as inspiration, both in the technology stacks that have been developed, but also solving these, again, critical problems in metals and mining and manufacturing and energy and defense. And looked at it as an opportunity to be able to monetize some of those conversations and just be more impactful. There's a lot of problems to solve out there in the built world, and we're looking forward to seeding the next generation companies.
Troy, I was reading you're looking for startups that focus on first order data. What does that mean, Troy, in simple terms, first order data?
Yeah, absolutely. So first order is an important terminology for problem solving, kind of at the first principles level. And really, what the world needs is data that is usable and can be benefiting the decision making that is happening. Especially in a world of AI where a lot of businesses will, be disrupted. The thing that will be very durable are sticky moats that have this first principle wedge, but also have the untapped data that exists out there. And so, a lot of the internet, a lot of the data that exists today for foundational models is found on the internet, but the information that's held in the corpuses of these organizations and, sort of the observations in the built world, that's the real opportunity here. And so being able to structure that data and leverage that data to create enterprise scalable solutions that, maximize our interactions with the physical world.
When speaking with founders, Troy, and you got to decide who you're going to write a check to then with this new fund, how do you sort of distinguish between what's real and what's hype? What are you looking for?
Look, there's a lot happening. This is probably the fastest rate of change that I've seen in technology in my entire life. And so things are moving at a fast break pace. And really the bet is on the founder. Being a founder, being an operator day to day gives me that vantage point to be able to say, this is a founder that has the grit, resiliency, and ambition to be able to pull this off. Markets will change, technology stacks will change, but it really comes back to betting on the founder.
There are other funds, Troy, I would imagine, and other smart tech investors also, looking in this same area. I mean, what do you think you all are sort of bringing to the table that differentiates you from those other venture investors?
Yeah, I think it's twofold. One, we again are some of the friendliest capital I think you could find out there in the market today, and that's because we're first and foremost operators. And so we feel, Jake and myself partnered on Gecko. We feel that how we've learned from the boardroom and how we've learned from investors over our 10-year history has given us a perspective on how to be most impactful and helpful to founders today. And so that's the text, that's the call. That's less of the boardroom engagements, right, where things are sanitized. And really being able to, again, decipher at the early stage, here's a company worth betting on. They're not all going to work out, but differentiating on these founders that are building real durable solutions for all the industries that need them most, from full stack AI companies to better weather data to predict climate and catastrophic events and our day-to-day comfort.
Could you potentially, Troy, I'm just wondering, find yourself in a position where you invest in a company that one day, ends up competing with you, Troy, competing with Gecko?
Yeah, look, I think that there's a ton of problems to solve out there. We've never had those kind of conflicts come up to date, but markets evolve and that sort of thing. It's definitely not a corporate venture fund, so we're not looking for things that just directly impact the benefit of Gecko or anything like that. So we think there's a ton of businesses that need this early investment, that need the durable patient capital that Gecko will be, as we benefit from the great partners we've had on our cap table.
If you're right about this sort of first order data future, Troy, I'm just curious, are there certain industries or sectors or companies that are at risk of being disrupted by that?
Yeah, this is very great. This is a very good question. I mean, you're looking at the industries that, run off cobalt and programs like that. And, really, there's, the statistic is the energy industry uses 2% of its data. I had a medical background before that, similar statistics. And, data, it can be exhaust, or data can be a real decision advantage and close a feedback loop that results in far superior outcomes in terms of how things are operated, how things are maintained, and how things are ultimately transformed for the next generation to come. We are at a critical pivot point here in America, where a lot of our subject matter expertise is fleeting, the ability to codify that, to structure that, to make these observations, and then be able to use that to train the next generation workforce and ultimately augment what could be a very large labor shortage here coming up.
By the way, before I let you go, Troy, I hear you're going to be judging some AI startups along with Mark Cuban. Walk me through that.
Yeah, absolutely. So Mark Cuban's been a role model for since I can remember. Probably watched 500 or so episodes of Shark Tank. Pittsburgh native as well. Also investor in Gecko Robotics. And he and I are going to be doing a pitch competition here in Pittsburgh, Pennsylvania, with NFL draft coming into town. So we're going to be making some early stage investments. Some cutting edge technologies coming out of Carnegie Mellon and the broader ecosystem. What's the ultimate prize there, Troy? Well, look, the prize is that there's tens of billions and $100 billion companies that are coming out of this region and beyond. Really, that for what benefits for these companies today is Gecko's putting meaningful checks. First Order's putting meaningful checks on the table, and so is Mark, and so are my other colleagues. So there's millions of dollars that will be dispersed over the next hour. Troy, great to have you on the show. Thanks for your time. Appreciate it. Thank you. Well, healthcare costs for employers are rising at their highest level in 15 years. That's according to a new report by consulting company Mercer, which finds organizations are considering passing on the costs to their employees. Yahoo Finance's Carrie Hannon has been tracking this story for us. Carrie, good to see you. So first, healthcare costs are rising fast. Let's start there. Just break that down for us, Carrie. Can you quantify it for us? How fast are they climbing?
Yeah, well, what the chief financial officers that Mercer spoke to, they're expecting 9% bump up this year in their healthcare costs. And they've been coming up, 7%, 8% last year. It's been steadily year after year ticking up, and they've been trying to absorb it. Of course, for the individuals, employees who have the benefit of this employee-provided insurance, they also have seen premiums increase. KFF said in the last 5 years for individuals, they've gone up 25%. So, it is something, but it's worth noting that they said, we just can't absorb this right now. And the one way that they can pass it on is, as you and I know, higher premiums and higher deductibles.
Yeah, I was going to ask you, Carrie. So if CEOs feel like, okay, I'm going to have to pass this bill along, I was asking, what does that actually look like in practical terms?
Yeah, and I think people forget because we don't actually see it in our paycheck. But if you're fortunate to have employer-provided health insurance, your employer is paying like 3/4 of that tab. That's one of the biggest pieces of your compensation if you think about it. It's a huge benefit for employees. So, we can get upset that, yes, in fact, these premiums are rising faster than wages are rising, faster than inflation. But in fact, it is still a pretty solid benefit for people. Look at it this way. If, say, you're, for an individual, it might be this is a ballpark figure, your premium could be $9,000. Your employer is picking up roughly around $7,500 of that $9,000. So for an annual premium. But so it still hits, it stings, when you're thinking about dealing with these other rising costs.
Carrie, great to see you. As always, thank you. Coming up, we have you covered through the closing bell on Wall Street. Don't go anywhere. Stocks ending the day higher after President Trump extends that U.S. ceasefire with Iran. Yahoo Finance's Jared Blickery has more on the market action. Jared.
Bullish day here, one for the record books, not in the Dow, but let's take a look at that first. It was up 340 points or 0.7%. A little bit of a rally over the last hour, but here's the record. NASDAQ Composite up 1.64%. That's also a record high for the NASDAQ 100, and you can throw the S&P 500 in there as well, closing at the highs of the day. Very impressive for these large cap indices, and it was really the large caps and the mega caps today over the smaller ones. Nevertheless, here's the Russell 2000. You can see some negative price action there. But let me show you what's going on with the SOX. That is the Philly Chip Index. 16 straight days to the upside. The last 11 have all been record highs. Another 2.7% today. Very impressive. Dow Jones Transports, though, those have been heading the other way almost all day long, and that is an Avis budget story. We're going to get to that in a minute. But first, let's take a look at the sector action. Well, there's the transport, so let's just start there. Here's Avis down 37% today. I'm going to show you the 1 month chart with a candlestick. Look at that huge red candle there. That's what happens at the end of a short squeeze. So the Dow Transports, you can see largely in the red today. Haven't seen that in a while. But let's check out the sector action in large caps. Tech was up 2.2%. That is day number 16 for XLK as well. Energy up over 1%. And those were the only two outperformers. To the downside, real estate was the biggest laggard, down about 0.7%. And inside the NASDAQ 100, ahead of Tesla earnings, we got Tesla up about 0.25%. But the big story was chips today. We've seen Broadcom up here 5%. Micron in the upper right up 8.5%. And some software names looking good too. We can take a look at those here. Then we got Oracle up 3.5%, Palantir up 4.5%, ServiceNow, CrowdStrike, PanW, Adobe, all of those up more than 3%, though IBM and SAP trading to the downside over 1%. Here's that semiconductor heat map, and you can see ASML and Intel bucking the trend, both of those to the downside. But if we sort by performance here, SanDisk, Micron up over 8%, ARM up 12%. So another strong day for tech. And I'm going to leave it on the Dow, and we can see a little bit of red here. I covered IBM, but check out Boeing up 5.5%. Haven't talked about his industrials as much, but industrials have been very strong. Lots of record highs in that group. And send it back to you, Josh.
All right. Thank you, Jared. Appreciate it. Let's take a deeper look at the markets now. Tom Hanlon joins me. He is National Investment Strategist at U.S. Bank Asset Management Group. Tom, good to see you. Let's start with the war with Iran, Tom, which continues to make and dominate headlines. You lay out different kind of multiple scenarios for investors there. What is your base case, though, Tom, for that? What are you telling clients, and what would that mean for stocks and bonds?
Hey, Josh, great to be on. As always, thanks so much for the opportunity. Yeah, we just try to lay a framework out for where things may go from here. Obviously, nobody has the perfect crystal ball, but our base case was just that the conflict and the closure of the strait would go on for a number of weeks, and we could see volatility in the markets. That was kind of evident in early to mid-March, and as we got towards the end of the month, then you started to get some more optimism that we were closer to the end of the war maybe than farther away. And that's why you've kind of bumped up into our best case, which is back to that uptrend and back to all-time highs where we sit today.
Do you look at the market reaction to this Tom, how the financial markets have responded to the war? Are the markets telling you, you know what, the oil price jump, it's going to be temporary? Focus on the futures curve. It's not going to have an impact on the economy and earnings.
Josh, I think the setup going into this is critically important. So the consumer was in really good shape. You had wages outpacing inflation. You've got federal tax refunds coming in about $43 billion ahead of last year. That's direct stimulus right into your checking account from the Treasury into electric fund transfer into your account. So we have a lot of good things in place heading into the conflict, and I think you're seeing that in corporate results, and stock prices are following that.
Tom, also interested to get your take on earnings season. We've got some big names reporting after the bell here. Tesla, IBM. I'm curious to get your expectations for this earnings season. What do you expect to see and hear?
Yeah, so far we had a lot of the banks reports. So you saw pretty good consumer health, whether it was their spending or worries about loans. So that looks pretty healthy. And now we're going to get into the tech sector and see, how are those AI investments turning out in terms of, what are they generating in terms of profits? And I think that's going to be a real key, which is looking at these big tech companies going through this big CapEx cycle and what are the fruits of and results of that investment looking like?
How would you broadly characterize valuations, Tom, at these levels after a big move off those March lows?
They're above historical averages, but we're not seeing the kind of valuations like we saw in 1998, 99, 2000 towards the tech bubble. And on a forward basis, even tech sector looks pretty reasonable to us just based on the expectation for how those earnings are going to come in.
Tom, I'm curious then, given that background, given that environment, how do you want to be broadly positioned in the equity market? What are you telling clients?
Really anything but defensive, Josh. So, we like, U.S. equities across large and mid and small companies. So the mid cap index hit an all-time high 2 days ago. So did small caps, and really just it owns sectors inclusive but beyond technology. So those physical sectors like industrials, materials, you've got good earnings growth prospects there as we're reindustrializing the U.S. and kind of rebuilding those supply chains. And then foreign stocks, they've been great this year. So foreign developed stocks in Europe and Asia and the emerging markets have been great places to be. But really anything but those defensive sectors like healthcare and staples, don't be too defensive in this market.
What about the AI trade, Tom? It sounds like you see AI broadening here. Walk us through that. Explain that for us. And then given that, who do you think benefits next?
Yeah, at first it was, do you have an AI strategy? And the second, then it was, what are you doing with your AI strategy? And then now it's, how are you monetizing that? So, you see the performance from the semiconductor companies and kind of all the feedstock into AI. And now it's the companies that know that they're able to utilize it best relative to their competition. So that's when we see it broadening, beyond just the purchase of AI technology, but what companies can employ that within their businesses and their business models to improve profitability and really broaden their client base as well. So we're going to see it within healthcare and the usage there, financials and other sectors.
And finally, Tom, just for fixed income investors listening right now, what's advice? What's best practice and guidance?
4% treasury yield is a good starting point, but there's opportunities above that. Homeowners are sitting with pretty good home equity. So those residential mortgages, that's kind of an interesting place to get some extra income supported by fundamentals. And for tax-paying investors, municipal bonds still look good to us on a tax-adjusted basis, whether you're buying investment grade or high yield, it looks pretty good to us.
All right, Tom, thanks as always for your time. Appreciate it.
Thanks, Josh. Appreciate it.
Time now for some earnings as Tesla's first quarter results are just hitting the wires. Let's look at those.
Appreciate
take a look at those numbers. Tesla's Q1 EPS clocks in at 41 cents. That's a beat. Street was at 34 cents. Q1 revenue, $22.39 billion. The estimate was $22.19 billion. Looking at Q1 gross margins, better than expected, 21.1%. Analysts had penciled in something closer to 17.7%. Q1 free cash flow, also better than what analysts have been looking for. That comes in at $1.44 billion. So better there for profitability and cash flow. Q1 gross margins, ex credits, 19.2%. That is versus 12.5% year over year. In terms of commentary we're getting, Tesla's seeing a rebound in demand in EMEA and North America. They see Cybercab, Tesla Semi, Megapack production, they say starting in 2026. Remember, heading into this print, this stock was up about 60% over the past year, but it was down about 13% so far in 2026. We are higher now, at least initially here, by about 3% in the after hours. I think some key questions will be the core auto business. There are these reports of a cheaper model joining the portfolio. I think investors want to know what that could mean for growth and margins. We did hear about FSD approval, remember, in the Netherlands recently. What could that mean for the rest of Europe? And then there are the questions that excite a lot of Tesla investors on this show. They want to hear more about expansion plans for robo-taxis and robots. Do we get any color on the timeline for Optimus production and deliveries? That conference call is going to start at 5:30 p.m. Eastern. We'll hear what Mr. Musk has to say then about those topics, and I'm sure a whole lot more. Coming up, we get you the latest software earnings that are just crossing on Wall Street. Don't go anywhere. Yeah, first quarter results just now crossing the wires. Let's get you those numbers. Q1 operating EPS 191, consensus was 181. Q1 revenue 15.92 billion. The street was closer to 15.67 billion. Turning to the divisions, it looks like that software revenue 7.05 billion. That's basically in line. Consensus was 7.04 billion. Consulting revenue 5.27 billion in the quarter. Analysts had penciled in something along the lines of 5.29 billion. Bloomberg noting here, it looks like IBM the AI book of business metrics, it doesn't look like they were reported in Q1. Turning ahead, in terms of the forecast, IBM still sees, they say, full year revenue at constant currency above 5%. The street was estimating 5.1%. Remember, heading into this print, the stock was down around 15% heading into this report. You can see, at least initially here, disappointment in the after hours, the stock down nearly 7%. Analysts on average, listen, the opinion's pretty divided on Big Blue. You got 13 buys, 8 holds, 2 sells. Jefferies had a good report kind of previewing the results, talking about how bulls really say, listen, this is an underappreciated kind of agentic AI beneficiary long-term. Bears have been pushing back, saying there's a lack of momentum with AI initiatives, and maybe at first blush here, it looks like this report isn't dispelling some of those AI concerns and worries for the company. Now let's take a look at the broader software sector. Joining me now is Rishi Jaluria, Managing Director of Software at RBC Capital Markets. Rishi, always great to have you on the show, my friend. So big tech's reporting. The software names are starting to punch through these reports, your area of expertise. Let's start bigger picture, because the debate here, Rishi, AI, is it a tailwind or a threat ultimately to software? You say here the AI bear case when it comes to software, you say it's overblown. How come, Rishi?
Yeah, absolutely. And Josh, always a pleasure. Thanks so much for having me, as always. Look, I would say there are a couple factors here, right? Everyone's focused on is AI going to replace software spending? And so far, what we've seen is a lot of AI spending is additive to software, right, as a whole. And that makes sense. You're able to do things you couldn't do before. You're able to unlock new use cases, and over time, start to generate better revenue outcomes, better competitive differentiation. I will also point out there's constant debate over, seat-based models, and we can get into that in a minute. But then the other one that's really weighing out there is, hey, look, why use off-the-shelf software if you can just leverage Cloud Code and OpenAI Codex and everything else and build it yourself? Well, I think the reality that's starting to set in with at least the field, and maybe the investment community needs to catch up with this, is the logic just doesn't make sense. You end up spending more money, especially now that we're getting more throttling of usage, more expensive tokens, and you miss out on innovation. It becomes expensive to maintain. And so replacing software with your own custom-built AI solutions ends up being more expensive and less innovative on a TCO perspective. I think it's going to take time for the market to realize that, but I think with a lot of the work we've done in the Valley, that's starting to become more clear.
Well, I guess, what does it take, Rishi, though, broadly, you think, to get software to work again? Like, what do investors, what do they need to hear to get excited about the sector again?
Yeah, I think there's 3 things that really need to happen. Number one is we need to see evidence that some of these incumbent software vendors can actually get their customers to use their own AI solutions and monetize them in a meaningful way. And it's still early in that, right? I mean, as it is, most of the AI adoption of the enterprise still tends to be in pilots or proof of concepts, or limited to areas like software development or customer support. So we need to see that start to happen. And I think that's going to be some companies that have more innovative AI roadmaps will be able to monetize it in a bigger way versus those that might be doing stuff that's easily replicable just with off-the-shelf LLMs. Number 2 is I think we need to start to see that kind of puck shift or waterfall flow, whatever metaphor we want to use, from the hardware and infrastructure layer into actual software, right? And whatever we call software is going to be debated, but we really need to see those application type use cases, right? See sales and marketing and HR and financial planning really start to use AI in a material way and go beyond where it's been today. And then the third thing, which is ultimately the output of the first 2, is we need to see accelerating growth. And we haven't seen that yet broadly in software. We've seen actually continued deceleration. Let's see what Q1 tends to bring. But when it starts to shift and we start to see a number of software companies accelerate growth, that I think really starts to disprove a lot of these AI bear cases, because how is AI killing software if growth is accelerating meaningfully?
On that monetization, though, point, Rishi, just pull on that thread a little bit more, because if you're saying, and correct me if I'm mischaracterizing, if you're saying the real payoff of AI and software doesn't come till 2027, why, if I'm an investor, I'm a viewer, I'm listening to this, Rishi, why do I hop in now then?
Yeah, look, I think this is the time to be a stock picker, right? I don't think this is the time to say, let's go buy the IGB and buy, every software company blindly. I think we have to look for companies that have those idiosyncratic factors where we can see, early signs of AI adoption and monetization. We can see the innovation already maybe indirectly benefiting them in terms of product roadmap. And, maybe there are other factors that lead to accelerating growth, things like improved pricing and packaging, better underlying net new ARR, net new ACV trends. And then I think you start to get ahead of the story, right? If someone wants to be patient and say, hey, wake me up when these stocks are 30% higher, I totally get it, just given what's happened with the software sector over the past 3 months and honestly over the past 9. But I think, we're going to look back at this and say, this was a great buying opportunity for the right companies.
So as these software names report, Rishi, I would expect you're going to hear a lot of software CEOs. They're going to, many might talk a big AI game, Rishi. If I'm listening to this as an investor, how should I think about it smartly? Like, how should I distinguish between, okay, what's real and what's marketing fluff?
Yeah, I think there's 3 things we need to do. Number one, companies that are disclosing AI metrics, many times I think are allocating revenue however they see fit. And so they're showing a great story with AI revenue or AI ARR, but it's not showing up in the overall revenue numbers, right? So that's number one, is just push back against the numbers if it's implying that the core is meaningfully decelerating or in certain cases shrinking. Number two is I think we want to look at companies that are showing like real meaningful usage, right? And if they can give any metrics around usage ahead of adoption, I think that's going to be really important. And number three is when we listen to these execs talk about what they're doing with AI, I think, we need to think is how easily replicable are these AI features and functionality? And the easy test I use is, and it's a very flippant one, but can this AI functionality that they're playing up be replicated by having ChatGPT or Claude open in a separate browser? If the answer to that is yes, it becomes really hard to monetize it. If it's solving a complex workflow and context problem, that's very hard to replicate elsewhere. And that seems much more defensible and much more monetizable to me over time.
Let's get to some picks here, Rishi. Microsoft, lots of debate on this one. Reported a solid Q2. What do you think we're going to hear in this report? And why do you tell clients, listen, that's a top pick?
Yeah, absolutely. Look, I think Microsoft has a lot going for it. Even putting valuation aside, and valuation is about as attractive as I've seen in the post-AI era. But I think there's a couple of things. Number one is, Microsoft, maybe they got caught a little flat-footed in terms of AI build-out and AI demand, but they've really expanded themselves from being just purely dependent on OpenAI to having this multimodal strategy. And you see that with some of the new announcements out of them, like the Microsoft Researcher Critique and Council, which not only helps you get the most efficiencies out of AI, but actually helps you reduce LLMs. And I think that multimodal approach is going to be helpful to them. Number two is I think they're making the right long-term decisions in terms of how they're actually allocating their infrastructure more towards first-party services like Office Copilot, GitHub Copilot, rather than purely for training workloads, even if that's going to benefit them in the short term. I think they're making the right long-term decisions. And number three is I think investors are underappreciating the innovation that is actually coming out of Microsoft. For a company of Microsoft's size, I'm actually seeing them experiment and innovate around AI faster than I would expect, them to see. And that is something that, as I constantly keep saying, innovation is the most important that moat that matters in the post-AI era. And I think as long as we have this rate and pace of innovation of Microsoft under the stewardship of Satya Nadella, I feel good about their ability to really cross the chasm in the post-AI world.
Let's talk about HubSpot as well, Rishi. You say here, this could be the most debated name in mid-cap software, competition from AI, front and center here. Why do you tell your clients this is on the buy list?
Yeah, absolutely. Look, I think number one, we started off this by talking about the potential for AI to start to shift at the application layer. And I think we're going to start to see that play out this year, where we can really see truly companies adopted in their sales and marketing place, and at the same time need to deal with the right context or right security. And I think HubSpot offers all that and more when it comes to context. Number two is I think they're in a really good position when it comes to AI because this is a very innovative company. Bear in mind, all the products that they have, sales, marketing, commerce, operations, service, content, have all been built organically on one single platform with a single source of truth. And, we talk about how important data and context are in the AI era, and HubSpot, I think, is really well positioned there. And number three, and perhaps most importantly, this is a company that I think has been truly innovative around AI, really showing use cases of AI that I would characterize as proactive rather than reactive or table stakes. And I think that a lot of that comes to the leadership of co-founder and CTO Dharmesh Shah, who really is very, very hands-on with AI in a way that I don't see too many public company execs at this market cap range being. And so for all those reasons, I think HubSpot can be a name that accelerates growth, sees AI monetization sooner than later, especially given the SMB nature of their customer base and the innovation they're bringing. And I think this is a stock that can meaningfully outperform when the market starts to catch up with that.
Rishi, I only have about 60 seconds left, but I got to squeeze this one in here. Pegasystems, which has been shelled this year, it's down about 40%. Another death of software victim. You say that's not true.
Yeah, look, Pega is one of those under the radar, I think, AI beneficiaries, and they just reported last night. I'd say it's a mixed quarter, but seasonality played a role there. When I take a step back from the quarterly noise and I look at the bigger picture, I'd say two things. Number one is we need a system where AI agents can talk to cloud, can talk to on-premise data source, and can work with mainframe systems, which, believe it or not, industries like mine still use mainframe systems in a big way. And Pega is one of the only solutions that's able to do that. None of the AI native solutions are able to leverage that. Number two is I think they've actually been pushing AI in the design and ideation stage of their product, things like Blueprint, that have received really positive customer feedback based on our checks. And that's something that I think could drive an acceleration in ACV growth for this business. So I put both of those two things together. I think it's very under the radar, and it's one that should be a real AI beneficiary, again, sooner than later.
Rishi, as always, we're lucky to have you on the show. Thank you, my friend.
Thank you.
Coming up, a deeper dive into the road ahead for Tesla. That's after its latest quarterly results. Hello and welcome to Asking for a Trend. Tesla is out with its first quarter results, topping earnings and sales estimates as the company says Cybercab, Tesla Semi, and its Megapack battery production are all on schedule. Here to discuss is Barron's associate editor Al Root, along with Yahoo Finance's Praz Sumeranian. Praz, I will start with you. Tesla reports, the stock's popping. What do you make of it?
Yeah, I mean, you kind of covered a little bit of that there with the big revenue beat. Not big, but a decent revenue beat there. Just the EPS much higher than what was expected, and also the gross margin beat there, 21.7 versus 17.7%. But I think you mentioned ramp up of additional AI compute, new factories across battery and battery materials. They said they further prepared lines for the production of Megapack 3, Cybercab, and Tesla Semi, right? So that's good. Their first large-scale Optimus factory set to start in Q2. Still haven't seen Optimus version 3 yet. That's still supposed to happen in April, but I don't know, time's running out here. But yeah, also positive free cash flow. That was supposed to go negative this quarter. It was, I think, 1.14 billion, so that was good to see, because as we know, they're potentially ramping up for 20 billion in CapEx spend across all these various projects. So I guess from an investor standpoint, you're happy to see better results. You're happy to see them talking about how the auto business is still trending higher in certain areas, and then they're not actually burning too much cash just quite yet.
Al, bring you in here as well. Heading into this print, Al, stock was down around 13% this year. We're moving higher here, at least initially in the after hours. What do you make of the report?
Yeah, first of all, hi Pros. You said basically everything.
Sorry,
no, but it's moving higher. So if you think about the call in January, the fourth quarter call, the stock was down 3.5% the day after, and I think that was sort of on the higher capex, right? 20 billion in capex, up from like less than 9 billion as they invest in their AI future. I just think he hit the high points, right? They've expanded robo-taxis to a couple of more cities, Dallas and Houston. The deck says that they are ramping unsupervised. We don't exactly know how many cars. But basically, it was good enough. So the stock's up about 4. And like you said, Josh, it has been sort of in this malaise. I think you could sort of describe it as everybody's waiting for what's next, i.e. robo-taxis, the next generation Optimus, how capable is that thing going to be? So decent quarter, but it'll still be, as it sits right now, it's down year to date. And we're still waiting for what Elon says starting at 5:30.
What about the cheaper reportedly model could be on the way? How should you as an investor think about what that could mean now for growth and margins?
Do we even care about EVs anymore, Bryce?
It's a fair point. I have Tesla investors on this show, Al. I can't even get them to talk about the car business. So your point is well taken.
No, but I mean, it expands its, Tesla probably won't sell 2 million cars this year. We used to value this thing off, selling 10 million EVs by 2030 and things like that. That's sort of a pipe dream. This Model 2 or a lower priced EV, they did the standard models last year. I wouldn't put too much stock in this thing coming out in the next year or two. So we'll just have to focus on Cybercab and robots. So we'll see what he says. Elon always says earnings calls are not product announcements. So somebody will ask about the Model 2, and that's what I predict he will say.
Just real quick, I think Al sort of hit the nail on the head here with the fact that we're hearing good things, right? Yes, there's scaling up here with the batteries, scaling up with the factories, with the robots, but nothing's really happening, right? Like we talk about unsupervised rides. There's a couple here and there. We have no idea how many vehicles are out there, let alone supervised versus unsupervised. We're talking about Cybercab's going to replace the Model Y that are used in the robotaxi fleet. When is that happening? There's no actual concrete timing. We don't know when these Cybercabs are actually going to hit the road. That we've seen them in the parking lots at Tesla factories, but they could just be pre-production builds, the validation builds, and not potentially production vehicles. So there's a lot of the positive news is in this shareholder deck and some of these notes here, but it's not, I think, concrete just quite yet. And I think that's what we're sort of waiting for. But the stock is moving higher, and I guess for investors, that's what they want to hear. But it is, light trading after hours.
Can I ask you, Al, when you mentioned the robo-taxis, so Austin, Dallas, Houston, what do we think the rollout could look like from here, Al?
Well, I mean, so you only have to go by what Tesla says and what Elon says, right? He wants to be in dozens of cities by the end of the year. They want to be in 9 cities in the first half of the year. So we got a couple months left. They're in 4 if you include testing in San Francisco. And Elon says things like cover half the U.S. population. Half of the U.S. population would have the ability to get in a Tesla robotaxi by the end of 26. What do I expect? I expect them to miss that. I think we can judge how they're doing based on, those goals of dozens of cities. We'll wait to hear what he says about the regulatory environment, how tough it is to get these things rolled out, how they're doing with unsupervised rides. Imagine it'll be very positive. But it's a funny thing. What an interesting question. What do you expect? I expect them to miss their timelines and people to remain optimistic.
That seems like a fair bet if history's a guide. Al, what about robots? Now, I've had Tesla investors on this show, Al. That's all they'll talk about is robots. I can try to push them to talk about other things, robots. On the call, would you expect Musk to get some questions about timelines in terms of productions and deliveries? And if he gets those questions, what do you think he might say, Al?
Yeah, well, he'll say it's potentially the largest industry in human history, right? And he'll talk about, 1 to 2 robots per human being as the addressable market in the far future. Those sort of comments, I don't think move the stock anymore. I think to Pras's point earlier, we want to talk about production and what he's doing at Giga Texas to develop a second robot line. We want to see the third generation of Optimist. That was supposed to be in the Q1, so hopefully they'll have like a robot event announced. This sounds funny, but it's not funny, right? Like we watch YouTube videos of Unitree and Chinese robotics, and they're doing dances and they're doing kung fu. Atlas makes gains. There are some robots, humanoid robots, in Amazon factories. So we really should start to see some improvement, and that's what I would like to see. It'll definitely come up. Robots will be a big part of this call.
What would you want to ask Musk on the call? He comes to you, Pras and Moranian. What do you ask? Yeah.
And
it's a family-friendly conference call. It has to be professional.
With Elon, yeah, we'll see. But I guess I would ask. Obviously the robot questions are first and foremost a big deal. They're talking about how they're going to make capacity for 1 million robots or 10 million robots in the next phase in Texas. We haven't even seen them use it in the factory, right? So let's just see those use cases first. But I guess I'd want more concrete data points on the robotaxi rollout. I want to know how many vehicles are out there. They talk about how the miles went up sequentially, I guess doubled sequentially. How many vehicles is that? How many rides is that? Are there any numbers? We're not going to hear this, by the way, but I want to know what are you making from this? What is sort of like the vehicle fleet going to be in the next 6 months? I think that's what I would want to ask, which we're not going to hear about. But I think right, Al, a lot of this notes talk about robotaxi unlocking. Robotaxi is the way of the future. It's the wave of mobility. Tesla is the best place for it because of the way they've used a camera-based system. They have the ability to make all their cars cheaply. That's what everyone's talking about, right? And we're getting just barely piecemeal nuggets of data.
Yeah, there's mystery in there's a valuation multiple in that mystery, right? Not knowing exactly how things are going, you don't have to worry about paying 200 times. I agree with you completely. One day this thing has to generate real money. That's why the stock trades at 200 times, depending on the day. It's the most expensive stock in the S&P. I do want to answer Josh's question. I would ask Elon for a loan.
That seems like a wise and prudent move. I'd be right with you, Al. Pras, definitely. You're right in there.
Oh, yeah. I need some money. I need some money. Yeah.
Al, Pras, as always, gentlemen, great discussion. Thank you.
See you guys.
Breaking news, Lululemon naming Heidi O'Neill its new CEO. Taking the helm at the struggling athleisure company on September 8th. O'Neill recently served as Nike's president of consumer product and brand, helping to grow the women's business and boost apparel sales. She left Nike in September after about 20 years at the company. O'Neill looks to lead Lululemon during a turbulent time after Calvin McDonald, who led that company since 2018, left in January. Lulu is facing activist investor pressure as well as backlash from customers over see-through leggings. We're seeing Lulu shares sink over 5% here in the after-hours trading on that news. The stock down nearly 40%, remember, in just the last 12 months. Stick around. Much more Ask for a Trend still to come. New documentary, Finding Satoshi, is out today. The film chronicles the investigation of the creator of Bitcoin, Satoshi Nakamoto's true identity. Scott Melker, host of The Daily Wolf, spoke to a cast member from that film, Puck founding partner Bill Cohen, yesterday about the film.
I watched this film, man, you blew my mind. Got to be honest. I think I'm a Satoshi enthusiast. Been down this rabbit hole for about 10 years, and this was extremely compelling. So why'd you decide to make this film, Finding Satoshi?
Well, you're kind to say that. And of course, people can see it for themselves tomorrow at findingsatoshi.com. Well, you say I made it. I actually was just sort of, as you discovered, the investigative reporter trying to figure it out. I was approached, I think, 4 years ago, believe it or not. I can't even believe it's been that long, by the director and the producer. Would I be interested in helping them find Satoshi? And as a investigative reporter and as a financial journalist and a former M&A banker on Wall Street, it was just too, it's one of the greatest mysteries of the 21st century. And it was just too delicious an opportunity to pass up. So I embarked on it and started on the journey. And I had no idea it was going to take this long or if we could even figure it out. I think we did. Obviously, there are different views on all of this. And we're very much proud of what we did and happy to have the debate with anybody who disagrees with us.
Quite a few reports of late surrounding the identity of Satoshi Nakamoto, namely Adam Back being named by the New York Times. I personally did not find it particularly compelling, but his name continues to come up and among a series of names. How did you really hone in without giving it away on who you believe may be Satoshi? What techniques did you use to investigate this that maybe others had not thought of before?
Right. I'm definitely not allowed to give it away today. It's available for everybody tomorrow. Look, what I say about, first of all, I have an unbelievable amount of respect for John Carreyrou, who did the investigation at the New York Times. I mean, Bad Blood is one of my favorite books. He's one of my journalistic heroes. So I certainly, even though I was in Peru when that story dropped and I had no idea it was coming, I read it with great interest when I got back. I would say, no pun intended, I would say with Adam Back, look, I think it's the right church, but wrong pew, so to speak. I think he was one of the 5 finalists that we had to seriously consider when we were thinking about who Satoshi would be. But ultimately, we rejected him relatively early in the winnowing process. And so, I respect John a lot, and I know he put a lot into it. We reached a different conclusion. I think we're closer to it. I hope we're right, but we will see. One of the things that I found so interesting, because before we brought Tyler Maroney in, who's a private investigator, I spent basically a year and a half, Scott, trying to interview kind of like the OG Satoshi experts, or people who I thought would be the Satoshi experts, whether it's, the obvious candidates like Michael Saylor or Fred Ersham or Katie Hahn or Joe Lubin or Brian Kelly or Brian Brooks or Bill Gates, even Joe Grunfest at Stanford Law. And basically to a person, what I found so interesting is they were saying, like, Bill, what are you doing wasting your time trying to figure out who Satoshi is? This is not a use. You're a wonderful investigative reporter. This is not a useful use of your time. You should be spending your time on other things. They were like dismissive, like it's not important to know who Satoshi is at this point. It was, some 12 or 13 years after, he'd written his white paper, and like Michael Saylor said, Prometheus had given us his fire, which was Bitcoin. Why do we need to know who really was the founder of Bitcoin, who was the genius behind Bitcoin? Fortunately, I think, John Carreyrou and others like us disagreed with that line of thinking. And, after about a year and a half, which included, by the way, a 90-minute interview with Sam Bankman-Fried in a hotel room in New York City when he was at the height of his wealth and power before he came tumbling down. none of which made it into the film because he didn't have any good answers either. So that's when we turned to Tyler Maroney, who I knew was a private investigator, and he helped us really get to the bottom of this.
Not knowing the identity is a huge part of being a Bitcoiner and the ethos of the entire space. So now that you think you figured it out and people know that, what are people's reactions in the industry to someone being named, and what are the implications of that?
Well, I mean, we had last week Adam Back being named. We've had other people being named in the past. I think they weren't even close, frankly. Adam Back was at least close. I think it's healthy. I mean, it's good to know who created, for historical purposes, who created the combustion engine. It's probably good to know who the people were for historical purposes who created the internet. And it's going to be good to know for historical purposes who created AI and who was behind that. I think it's good to know who the creators of Bitcoin is or was. And I think it's a healthy investigation. It's certainly a great intellectual exercise. It was incredibly fun and exciting journey to be on. I can't believe it took the past 4 years to do, and to have the movie finally be coming out tomorrow is, of course, very exciting, and want everybody to see it. And I don't think we're wrong, but if we are wrong, then let's have that discussion. I would love that.
Stick around. Much more Ask for a Trend still to come. Time now to watch Thursday, April 23rd. It's another huge day of earnings reports, starting off on Intel, reporting after the close. Investors watching whether the long-awaited turnaround is starting to take hold. Analysts expecting Q1 results to come in roughly in line, but under the hood, stronger demand and pricing in server CPUs are helping offset ongoing weakness in the PC market. Turning to Comcast, the pressure building. The company's bracing for a tough quarter with profits expected to take a hit from higher NBA rights costs. At the same time, broadband subscriber losses remain a concern as competition intensifies. Investors will be watching guidance to see if the back half of the year looks any better. In travel, American Airlines might be feeling the squeeze after Thursday's report. Analysts anticipating higher fuel costs and rising labor expenses to weigh on margins, even as demand holds up. Big focus how much pricing power airlines really have in this environment and whether costs continue to outpace revenue growth. On the consumer side, American Express could be a bright spot. Analysts forecast the company to beat earnings estimates in Q1, driven by lower credit losses and steady spending from higher income customers. Still, expectations are high, and investors will be listening closely for any signs of stress in that core customer base. On the macro front, we're also getting fresh mortgage rate data from Freddie Mac on Thursday. 30-year fixed mortgage rate has now fallen for a second straight week to 6.3%. That could offer some relief to the housing market, but rates remain elevated overall. That's a wrap on today's show. Thanks for watching.